Welcome to Deep Dive into Finance channel, where we unravel the complexities of finance and investing. Today, we explore the concept of appraisal in finance and investing. In simplest terms, appraisal refers to the process of determining the value of a company, property, or asset. It's like peeling back the layers of an onion to reveal what's truly inside. But instead of layers of an onion, you're peeling back financial statements, market data, and economic indicators. Whether you're an investor looking to buy shares in a company or a business owner contemplating the sale of your business, knowing the true value of the asset at hand is paramount. It's a critical part of the investment process, acting as a compass to guide decision-making and strategy formulation. So, sit back, grab your notepad, and prepare to journey into the world of financial appraisals. Stay tuned as we delve deeper into this fascinating concept. Now that we understand what appraisal is, let's dissect the process. The appraisal process, while seemingly straightforward, can be an intricate dance of data, analysis, and expertise, a series of steps that lead us to the value of an asset. Firstly, we begin with the identification of the asset. This might be a piece of real estate, a business, a work of art, or any other item that holds value. Identifying the asset involves understanding its unique characteristics, its condition, and its context in the market. Once we have a clear picture of the asset, we move on to gathering and analyzing relevant data. This is where we look at comparable assets, market trends, and other factors that could influence the asset's value. For instance, if we're appraising a piece of real estate, we might look at recent sales of similar properties, zoning laws, and the general economic climate. We have to consider both the macro and micro aspects, as both can significantly impact the asset's value. Now comes the most crucial part: analyzing the data. We can't just take the raw numbers at face value. We need to delve deeper, exploring the nuances and subtleties that lie beneath the surface. We need to make sense of the data, extracting meaningful insights that can guide us toward an accurate valuation. This is where the expertise comes in. A seasoned appraiser can spot patterns and trends that may not be immediately apparent, bringing a level of depth and sophistication to the analysis. Finally, we arrive at a value. This isn't simply a number plucked out of thin air. It's a carefully calculated figure that reflects the asset's true worth. It's the culmination of all the previous steps, a testament to the meticulousness and precision of the appraisal process. The appraisal process is a bit like a detective story, with each step revealing a new piece of the puzzle. It requires a keen eye and a sharp mind, but its importance cannot be overstated. It's the foundation upon which sound financial decisions are built, and a key tool in the investor's arsenal. The appraisal process requires a keen eye and a sharp mind, but its importance cannot be overstated. Now, you may ask, what role does appraisal play in investing? Well, let's dive right into it. Appraisal is like the compass of investing. It guides investors through the often tumultuous sea of potential investments, helping them steer clear of potential pitfalls and toward profitable opportunities. Consider this. You wouldn't blindly pick a destination and set sail, would you? Similarly, in the world of investing, you don't simply throw your money at the first opportunity that comes your way. You need to know the lay of the land, the currents of the market, and the potential for storms on the horizon. This is where appraisal comes into play. Appraisal is a critical tool that provides a realistic and objective valuation of an investment opportunity. It's a process that involves meticulous examination of various factors, from financial data and market trends to risk factors and future projections. This evaluation helps investors understand the true value of an investment and its potential for returns. Without proper appraisal, investing can be akin to sailing in uncharted waters. The risk of making a loss-making investment increases significantly. On the other hand, a well-conducted appraisal can illuminate the path to a wise investment, helping you navigate towards potentially profitable ventures. But it's essential to remember that appraisal is not a one-size-fits-all process. What works for one investor might not necessarily work for another. Each investor has unique goals, risk tolerance levels, and investment horizons. Hence, appraisal should be tailored to the individual investor's needs and circumstances. Moreover, appraisal is not a one-time event. It's an ongoing process that needs to be revisited regularly as market conditions change and new information becomes available. After all, the only constant in the world of investing is change. Remember, a good appraisal can be the difference between a wise investment and a costly mistake. It's the compass that points you in the right direction, helping you make informed decisions that align with your financial goals and risk tolerance. So, next time you're about to make an investment, don't forget to appraise first. The importance of appraisal in finance and investing is monumental. It's the bedrock upon which many financial decisions rest. It's the guiding light that leads investors through the murky waters of the financial world. Let's explore why. Consider this. You're a lender. Would you grant a loan without knowing the worth of the collateral? Of course not. An appraisal gives you that assurance. It tells you the exact value of the asset in question, helping you decide whether to approve the loan or not. Now let's shift the lens to insurance. When you file a claim, how does the insurance company determine how much to pay you? You guessed it, through an appraisal. An accurate appraisal ensures that you're compensated fairly for your loss. But appraisal's significance extends beyond these realms. It plays a pivotal role in taxation as well. When you're taxed on an asset, be it property, a vehicle, or even a piece of fine art, the tax amount is based on the asset's value. An appraisal helps set that value, ensuring that you're neither overtaxed nor undertaxed. Now let's talk about mergers and acquisitions, a realm where the stakes are sky high and accuracy is king. In such transactions, companies need to know the worth of their potential acquisition. An appraisal provides this information, helping companies make informed decisions that can potentially save or make them millions, if not billions of dollars. And finally, let's not forget about estate planning. When you're planning to pass on your assets to the next generation, you need to know their value. An appraisal helps establish this value, giving you peace of mind and ensuring a smooth transition of wealth. So you see, the importance of appraisal cannot be overstated. It's a key cog in the financial machine that keeps our economy running smoothly. It's the bridge between uncertainty and knowledge, between risk and reward. Appraisal is not just about numbers, it's about understanding value. With all this information, you can see why appraisal is a vital part of finance and investing. In our journey today, we unraveled the intricate world of appraisal. We discovered that it's far more than just a financial term. It's a critical compass, guiding us through the vast and often unpredictable landscape of finance and investing. Let's take a moment to revisit what we've learned. We began this excursion by understanding what appraisal in finance means. It's a process of determining the fair market value of an asset. Whether it's real estate, a business, or a precious gem, appraisal helps us understand what's worth what. We then delved into the process of appraisal itself. It's not a random guess or a hunch. It's a meticulous process, often carried out by certified professionals. They examine the asset in question, consider various factors like its physical condition and market trends, and then arrive at an estimated value. It's a systematic process, grounded in fact and analysis, rather than conjecture. We also explored the role of appraisal in investing. It's like a lighthouse guiding ships in the night. Without a proper appraisal, investors could be sailing blind, potentially risking their capital on overvalued assets. On the other hand, a good appraisal can highlight undervalued assets, paving the way for profitable investments. And let's not forget the importance of appraisal. It's not just about numbers and values. It's about reducing uncertainty, managing risk, and informing decisions. Whether you're a seasoned investor or a beginner, understanding the value of an asset is crucial. It can help you decide whether to buy, sell, or hold, and can potentially increase your returns. But remember, appraisal is not a silver bullet. It's an estimation, not a guarantee. Market conditions can change, and the actual sale price of an asset may differ from its appraised value. But even with these limitations, it's a vital tool in the investor's toolkit. In conclusion, appraisal is like a map in the world of finance and investing. It provides direction, reduces uncertainty, and helps navigate the path to potential profitability. But just like a map, it's only useful if you know how to read it. That's why understanding appraisal, its process, and its role in investing is so important. So, harness the power of appraisal. Let it guide your investment decisions, reduce your risk, and potentially increase your returns. It's not just about understanding the value of an asset. It's about understanding the value of your investments, your financial future, and ultimately, your peace of mind. Thank you for joining us on this deep dive into the world of finance and investing. Remember, understanding the value is the first step towards making smart investment decisions.